Good evening. Happy Monday, everybody. It's July 22nd, 2024, here at PreciseAlgorithmTrading.com. And just like most nights, I'm going to go through our trading systems and we're going to look at the markets and kind of, take inventory. It's the kind of thing I do for my own personal homework. It helps me kind of know which direction to really put the emphasis on in the markets as far as where to deploy capital really is what it boils down to. So without any further ado, let's go. This is the Dow futures contract. I explain this stuff. I do keep a history, especially in YouTube, of all these videos, so you can go back and look at this stuff. It's literally almost the same thing every night, because you have to keep up with what's going on. But anyway, how this works: this is a automated trading system, and all the green dots are new equity peaks. And this is on a little bit of a drawdown right now, but this is from literally a time frame from 12/18 through today, so last December 18th. And the idea is to have an upward sloping equity curve, and that's what we have. Today's trade was just one, and it was one stop out, so no big deal. We're probably due for a nice trade here. I mean, we had one okay trade not very long ago, but we've had, we need something like this again. So, um, the Russell actually had a peak, I think, on Friday, and then today we followed through with just one little stop out. No big deal. This one's been good really lately. But the story of the day is this new equity peak that we got in the NASDAQ. So this is also from 12/18 through today. And that's a nice point there because we had really today's trade. This thing trades more often than the other ones, more times per day. And you can see here, those are the trades for today. So that was a really great day. And yeah, that's the end of the automated trading system. So let's look at the manual systems. And so I actually went ahead and made this a little cleaner looking of a chart, at least I think. Not sure what's going on there at the top, but that's all right. The normally I have a lot of lines on this chart so that I can see the different moving averages and what they're doing, but um, and I've got a trend ribbon like over here on the monthly chart on the left hand side. But I took all that away. I've still got the stop, which is the 2 ATR, and the 3 ATR, which is what the dark gray line is versus the light gray line. But the pivots are everything, the trend is everything, and I went ahead and said, well, let's make the color bars match the trend. So you can see in this case, this is actually all the markets put together, but this is a really nice, simple way of looking at the system that I usually run through, except I've jammed it all together and said, so really what it boils down to is as long as this moving average is sloping up, or even if it's sloping sideways and the price doesn't come down through it, then this trend is still intact. And you can actually see it all the way back through here. There's a place where it came down through it, and so the bar turned red. And you can see that that happened a couple times. Well, that's where these pivots come in. So you could be bullish this whole way without any really looking back, and then it comes down and through, and first thing it's going to do is turn gray. Well, I shouldn't say all the time, but that's what it's normally going to do. And then when it does turn red, you could go ahead and set your one pivot back, or you could actually set it at the bottom of that candle, and just if the market doesn't come down and take you out, then you're still good to go. And you can actually see, I can see it. I don't know if you can, but the high or the low of this bar is actually higher than the low of this bar. So if you set your hard stop there underneath that candle, this one didn't even come down and take it out. It just took off again, and then it turned yellow and kept going. When it turned gray here, it didn't close under, so it's really good to go. And there's another gray one, and then here it turns red. You could set your stop underneath that bar, and if you get stopped out on this day, which I think you did, then that's fine. You could actually go short either on that day, get out and go short, or on the pullback to the line here, and you could actually write it down. Now those don't the I ran back math on all this, and I have for the stock market in general, the shorts don't pay off near as well as the longs do. So it's which goes to reason. Big money usually keeps the institutions keep their money invested. It's just the way life is. Anyway, let's look at the S&P 500. I'm going to try to get this to zoom out, and for some reason it is not. That's great. It's fascinating. All right. Something's going on with my tech tonight, but that's okay. You're gonna have to look at them like that, and the future cloud's on there, but I'm just gonna crowd it out so we can see more of the chart. But you can see the S&P 500 actually had a couple of down days, so it would have been a time to be out if you were long the actual S&P. But now we've come back up, and this is a gray candle followed by tomorrow's candle, which is throwing a signal back up. However, tomorrow's candle doesn't count until the end of the day tomorrow, so we'll just keep an eye on it. By the way, this whole price action over here on the right is totally different than what's on the monthly chart. The monthly chart I didn't change. So the S&P today actually went up 1.08%. The Dow went up 127 points, or 0.32%, and still looks pretty solid over here. I'm going to do this. That'll get me there. Yeah. Get me zoomed in a little bit, or out a little bit better. I like to see the structure of where we came from, and especially when we're breaking through, like this support area that used to be resistance, and now we're pulling back into this 50% territory, which is what that dotted line is all about. So, yeah, the Dow still looks pretty strong, even though we had a pretty major pullback in the last couple days. The Russell pulled back up pretty strongly. We got a squeeze fired long situation on the Russell in the weekly chart, although this is the beginning of monthly chart, so we're not done with the month yet. We'll be done with the month in about 8 or 9 days. So, nice breakout though on the Russell, and it looks like it's got legs. Now, earnings are imminent of a lot of companies, which I'm guessing is why all these futures are moving so fast. I don't even know what's up for earnings today, but I'll take a look at some of that aftermarket, and I'm sure I'll hear about it in the news. But earnings are going to drive stocks going here, so in both directions for what it's worth. So that's the Russell. The Nasdaq today was a big one. It went up 1.58%, and you can see here that it's pretty bearish at the moment, even though our, the real trend has been higher. I mean, the longer term trend has been up, which is really, you can see it clearly on the monthly chart. But we're unwinding a little bit on the daily. And let's take a look at some NASDAQ stocks. NVIDIA. Starting to act like it might turn around. However, the way I look at this is a gray bar after an uptrend is more of like a continuation pattern most of the time. And this is a gray bar after the beginning of a downtrend. So unless this turns around and turns green, I consider this still to be in a downtrend. Especially since we have momentum indicators that are all acting lower down here. And big wicks on these big tails on these monthly candles. Microsoft. Let's look back at that NVIDIA again. NVIDIA has earnings 8/28, so we got a lot of time. Microsoft. Has earnings 7:30, so that's popping up here pretty quick. All right, let's look at the IYT Transportation Index, and you can see we had a breakout trade here and a pullback. So this is actually a new momentum or impulse wave to the upside, and this pullback to me is a great place to buy, because all I'm risking is really the difference between there and where this yellow moving average is. Oil, not the VIX, oil. USO, I got a stop out, so I'm out of this one and looking to potentially get back in, mostly because of the future cloud. And gold. Big gap lower. So commodities seeing a gap is really what it's boiling down to. And that's a danger in just being in commodities in the first place. TLT. I'm still looking for a potential trade in TLT and bonds. And let's look at SPXU. SPXU actually threw a signal, but then it's gray again. So keep an eye on that one, because this is a way to play the market, to play the downside of the market. So if the market's going to roll over, this is one to be in, because it will actually go long. Okay, and I wanted to take a look here because the VIX did come back inside the Bollinger Bands and threw a signal, and that should be a an indication of, I mean, if you look back here, I mean, we typically get lower volatility after that happens, even if it's just for a few days. In this case, it went on for a month, but in that case, it only went on for a few days. And here it went on for a month. We got longer. There's sometimes an aftershock, so it's kind of, we need to watch for that a little bit. But generally speaking, this market looks really strong, even though these the charts look like they're just too high up, but the market can do anything it wants. So I'm not gonna, I'm certainly not gonna argue. So that's enough of that. Let's flip to stockcharts.com and put in our bullish, so we can look at the bullish percent indexes. So the industrials didn't move today. The NYA down 0.12%. The transportation index didn't move. The NASDAQ up 0.04% or next to nothing. The S&P 500 minus 0.59%. The S&P 100 minus 1.52%. And the NASDAQ 100 minus 2.04%. So the bullish percent indexes don't look all that bullish. So, but what we're really watching for is a reversal, especially on the NDX with a column of X's. So that's what I got, and hope it helps. Take care, guys. Good trading, and have a great night.